Hello, Trade Pros. This is Mark from Trade Pro Academy, and in this weekend, we are going to continue with the 2020 Outlook series. In fact, we're going to be looking at the outlook for gold in 2020. If you guys haven't had a chance to yet, we've posted two great videos on 2020 outlooks last week. Those were on the S&P 500 and on the US dollar. So we'd recommend checking those out first before you take a look at gold. And we've also got another exciting video, rather an outlook for you guys coming in tomorrow. So if you haven't had a chance to yet, make sure to subscribe to the channel, check off that notification bell to get notified when we drop any new content or anytime that we do go live. In addition to this, if you guys are enjoying the content that we are putting out, please make sure to smash that like button. Really helps us out with the YouTube algorithms and shows us that you guys are enjoying some of the work that we're putting out for you. So with that being said, I'll give you a chance to subscribe now and we'll see you in the next slide. All right, Trade Pro. So now that you've gone ahead and subscribed and you've smashed that like button, let's go through the agenda for today's video. So what we're going to cover first is 2019 year in review. We're going to have a quick peek at some of the key performance metrics for gold in 2019, as well as some of the key drivers for the year. Then we're going to take a look at the 2020 outlook. We'll also look at some key drivers and risks to keep an eye out for, and we're going to also jump onto the charts to conclude this video with a little technical market analysis of the gold futures market. So we're going to look to see if we can get you guys some good, solid key levels to keep an eye out for into the remainder of this year. So that being said, let's jump into the 2019 year in review. All right, Trade Pro. So here we are with the 2019 year in review and a quick little performance summary on gold. Gold opened 2019 at 1285 and closed the year at 1523.10, and that represents a year-to-date gain of 18.87%. So in addition to stocks rallying quite a significant amount through 2019, we also saw the same from gold. In fact, if you've been living under a rock, you would have heard, or you wouldn't have heard rather, that gold has actually hit multi-year highs above 2013. I believe that was a previous time gold's really traded above 1400, and the 2019 high came in at 1566.20. That was printed in September of this year, and the 2019 low came in at 1267.30, and that was printed in April of 2019. So now that you guys have a little bit of a summary on gold's performance through 2019, let's take a look at some of the key drivers that drove that performance, rather the outperformance of gold in 2019. So what are some of the fundamental drivers behind gold's rally in 2019? Well, there are a couple to name a few. One in fact can be easier monetary policy environment. So what we've seen throughout 2019 is a bit of global economic uncertainty, and we've seen a lot of central banks start to loosen their monetary policy in the form of rate cuts. And generally, when you tend to see rate cuts, what you get is an outflow of capital from those economies, such as the US dollar, Australian dollar, New Zealand dollar, Canadian dollar, etc. We've seen a lot of global economies, the central banks of those economies rather, cut rates in 2019 in an attempt to kind of stabilize the global economy. And so generally when you tend to see rate cuts, you'll have that capital flow out of those currencies and into safe haven assets, gold being one of them. So easier monetary policy throughout the global environment has led to a little bit of a bid in gold in 2019. Another big reason why there was big appreciation in gold in 2019 was as a result of the trade war frictions. And so this has been, common in 2019. The biggest headline was US China, but there were also smaller stories such as that of US and Mexico, US and European Union. There was also US and Argentina, US and Brazil trade wars. Not as big as the US China one, of course, but those are also the smaller stories. And that kind of leads into the last factor here, central bank demand. Generally, what tends to happen is a lot of these central banks, they start to buy up safe haven assets such as gold as a means to diversify their holdings out of US dollar reserves. And so as we started seeing a little bit more protectionism coming out of the United States in 2019, we do anticipate somewhat of the same into 2020. And as such, we can anticipate to see a little bit more central bank demand for gold, and that can as well support the current rally that we've seen in 2019. So those are some of the key drivers that we had in 2019 that led to gold's advance. Now we're going to take a look into the 2020 outlook for gold to see what we can anticipate coming in the year ahead. All right, guys. So here is our gold outlook for 2020. We are expecting somewhat of a bullish narrative over the course of 2020. And here are the main reasons why. These are the key drivers that we will be looking out for into this new year. So the first one, geopolitical tensions. It's no surprise that as we came into the end of 2019, we did have some forms of geopolitical tensions. Obviously, you had the trade wars. However, we started seeing a little bit of a heat up in the, or rather, escalations in tensions between the US and Middle East. So we do see tensions out in Middle East, and more recently, we did see, you know, increased or escalated tensions between US and Iran, and this has the potential to go on throughout 2020. And as such, when there's tensions like this, money tends to flow into a risk off environment. And in a risk off environment, you tend to see safe haven assets such as gold, such as the Japanese yen, such as the US dollar tend to catch a bit of a bid in those kinds of risk off environments. Second, you've got trade war risk. So going into 2020, a lot more of what we've seen in 2019. We're honestly expecting pretty much the trends from 2019 to continue into 2020. So that's kind of supporting further gold upside. Is if this trade war continues on, we did have US and China tentatively agree to a phase one deal, which is yet to be signed as of January 15th. So we'll see how that goes. If the trade war, if the trade wars, the tensions tend to get a little bit worse, if these negotiations start to deteriorate, what you can see is again, you'll get more uncertainty in the markets, and that will likely lead to a bid in gold. However, if the trade war negotiations take a turn for the better and we see a phase one deal actually signed, then that can actually put some downside pressure on gold as uncertainty, well, there's going to be less uncertainty in the market, and that can lead to a more risk on environment where money will flow out of the safe haven assets and into the risk on assets such as equities. All right, number three, another big driver we're going to be keeping an eye out for is global economic uncertainty, and there's the growth slowdown story. So as we mentioned, 2019 was a year of rate cuts across the global economy, and we'll see if those rate cuts actually do anything to spur economic growth into 2020. If we start seeing signs of economic expansion in Europe and in Asia, and we see a stabilization of economic growth out of the US, then that can add to, or rather, that can increase the yields in those countries, which can also put downside pressure on gold. So if we see the global economy start to stabilize, that can also weigh on the upside in gold and can lead to some weakness into 2020. Furthermore, we have central bank monetary policy. So similar to 2019, if we see central banks continue to cut rates, this can again lead to a rush of capital into those safe haven assets and can lead to a bid in gold. So we'll see what 2020 has in store as far as monetary policy. Out of the United States, 2020 is a little bit mixed right now. There's no anticipated cuts or hikes at the moment. The Fed is on hold at the time being, so we'll see how that goes. If the Fed becomes more dovish and they do want to cut rates again in 2020, that again can lead to a potential bid in gold. However, if they start tightening, which doesn't seem the most probable at this time, at this point in time. However, if they do start tightening, that can also weigh on any potential gold upside. So these are the general drivers that we're going to be keeping an eye out for into 2020. And let's jump onto the charts now, show you guys where gold has traded in 2019, and show you guys some key levels to keep an eye out for in 2020. All right, Trade Pros. So what you guys see in front of you here is my TradingView charts, and this is the gold futures on a yearly chart, or rather a yearly candlestick. So each candle in this chart represents a full year of trading. And here is the 2019 candle. You guys can see that we did break out of a big range we had since 2013 on some big volume, showing that big money is supporting this move higher. So where can we reach up to? Well, we're starting to see a push into 1600s into the first 2 weeks of January. The real big level that I'm kind of watching for here on the yearly chart is these previous yearly closes and this previous yearly open here, right around 1675 or so. So I'll just drop a little line onto there, 1675. And that is really our first target for 2020. First upside target. We'll see if we can pull up into there. Let's jump down to the monthly time frame now. So here's our monthly time frame. We are going to ignore this current month as this is 2020. All right, guys. So that's January 2020. Looking back at 2019, what did we see? Well, 2019 had a pretty nice rally, as we mentioned. What you guys will see is that we kind of opened up the year right around previous resistance. We consolidated for the first couple of months, and then near the half year mark, right around summertime, we finally saw that breakout above that 1400 marker. That was a key level that had held gold prices down. It capped any upside since 2013. So big multi-year breakout on great volume as well, good supporting volume. And what we saw after that leading into 2020 was sideways consolidation. All right, guys, so we had some sideways consolidation into the end of the year. And so generally when you have a big breakout like that on big volume, you'll often see consolidation before the next move. What you want to see in that consolidation is you want to see decreasing volume, which is exactly what we are seeing. And so at this point, we're looking for a breakout to the upside. However, that being said, I do want to mark out another level here on the monthly time frame, and that is this level right in here, right around these 1550s. And the reason I want to mark out this level is because it comes at a pretty key market structure zone here. And what I'm seeing is we had potential, rather we had resistance in previous years, which held a support, which held a support again, held a support a third time, held a support a fourth time, and then we finally saw that breakdown below that level. So as we've rotated all the way back up into that zone, it comes as really no surprise that we did have consolidation right there. And so the key thing to look out for here in January is to see if we can get a monthly close back above that 1550 marker. If gold can do that, then we'll likely have further upside into the 1675, 1700 round numbers. Back above there, we can potentially reach up into 1800, which is a level gold hasn't seen since around 2011. All right, so that is the monthly chart. Let's jump down to the weekly chart here and take another closer look at what we've been seeing inside this market. So on this time frame, I can adjust these levels a little bit. Let's move that up to kind of encompass there. So let's call that 1570. All right. And I still want to keep that key level from the yearly chart. And what I'll do with this is I will just mark it out a little bit thicker here, and we'll make that purple. There we go. So that is a key yearly high. What we are seeing at this point in time on the weekly time frame is we've had a pullback from these highs at the 1570s. We've rotated back down into those 1450s, and we've seen again another bullish move higher here. This time, however, the volume doesn't seem to be following suit. What you guys will see is the volume on the selling side here, selling volume came in on pretty high volume, and this recent rally higher didn't really have above average volume, which is a little bit concerning here on the weekly time frame. What you guys are seeing at this point in time, it is Tuesday, January 6th at the time of this recording, and we do have a pin bar starting to form here on this weekly time frame. So this is showing there's obviously selling pressure coming in at that 1600 marker, which could get us a bit of a pullback in the coming weeks into these 1450s or so for the next move. Let's take another look down into the daily chart to see if we can further ascertain some strong price levels. So here's the daily, and what you guys are seeing is a bit of a gap above these previous highs here. We've come into this zone on big volume, you guys are seeing volumes really increasing here at this upside, and we are seeing a bit of hesitation from the buyers. There's obviously buyers here because the market has these upside wicks, but what this is showing us is that there is selling pressure coming in around these levels. Between these 1580s and 1600s, there is definitely some selling coming in, and you can see that vis-a-vis the volume bars. All right, so big volume generally means big money. So what we are seeing here is a pretty big wick, and we'll see if this thing can close below 1560s. If it can, we'll likely get a bit of a pullback, as mentioned, right into these 1480 levels where we had this breakout. So that's where the impulse started. We've come up and breached previous highs. What I'm anticipating here is a pullback into this zone, a little bit more rotations, and then we're going to look to make a potential run into and above those previous highs and into these 1675s. That's kind of what we're going to be watching for. This market can get a little bit slippery if we do get back below those 1460s, at which point we'll likely be in a zone or in a little bit of consolidation for 2020 until the next move. So that's what we've got for you guys today. We've got gold at a resistance level currently between these 1580s to 1600s, a potential support between these 1480s to 1460s, with our ultimate upside target for this year right around these 1675s. So trade pros, that wraps up the 2020 gold outlook for this year. If you guys have enjoyed this one, please make sure to smash that like button. And if you haven't had a chance to yet, make sure to check out those prior two videos on the S&P 2020 outlook and the US dollar 2020 outlook, as they are all intercorrelated, and you guys will find nuggets in each of those videos. I promise you guys that. So that being said, if you guys enjoyed this, please make sure to subscribe and check off that notification bell. Until next time, good luck and good trading. Take care.